think if you take a look at the recent price action of Mexican peso, pretty much since Trump got elected, that there's a lot of the fear and the anxiety that has already been priced in. I think that the policy actions, executive orders are expected to be taken today will be no surprise. What was a bit surprising is earlier this week, the Mexican government was swift to say that they have to start taking defensive measures. I don't know how much of those defensive measures will actually work, but I think that, this is all pointing to the potential for a trade war. Of course, in this situation, Mexico probably loses out more than the U.S. But I think, this is the beginning of probably, more weakness in Mexico's economy, more difficulties to sustain any type of growth they can muster up, and, likely more weakness for the Mexican peso. We also think the U.S. dollar, in the long run is going to head higher. So that's going to, affect the currency in Mexico negatively as well. Of course, in the long run, the path to stronger currency is always through a weaker one. So a weaker peso could eventually benefit Mexico. But because we have so much trade, the U.S. has so much trade with Mexico, and because of this, the possibility of a border tax as well as the wall is really going to slow any positive effects.
Kathy, you say that your broader outlook is for the dollar to strengthen. It's obviously, in terms of the dollar index, off of its highs somewhat. What is really going to be the key swing factors in terms of getting the dollar moving again? Is it going to be these policy moves, a border tax, a lot of this noise around those effects, or just simply the way the economy goes and the yield differential in our fixed income markets?
I think you have to recognize that it's going to be all of it, and that's why the trajectory of the dollar, in my opinion, in the long term is going to be upwards. Because while there's a lot of uncertainty right now, and everyone's watching China very closely to see if they take any stronger retaliatory actions, depending upon how aggressive that border tax is going to be, I think that protectionism as well as border controls ends up going to be positive for the U.S. economy. Everyone has taken a look at numbers that say, 20% border tax could be effectively 15% positive for the dollar index over a 3-year period. 3 years is very long period from now, but I think that plus the inflation effect of these taxes will end up driving the U.S. dollar higher. Now, that does not preclude short-term U.S. dollar weakness, of course, because of uncertainty.
One point I'd argue with you, though, on Kathy, and I agree, all the signs, all the policies point to a stronger U.S. dollar, inflation, higher Fed interest rate hikes, infrastructure spending, corporate tax reform, except for the fact that President Trump has already said that the dollar is too strong, and the strong dollar could get in the way of a lot of his policies, including a renaissance in U.S. manufacturing.
You're absolutely right. But I think presidential rhetoric in regards to the currency only has a short-term effect. It doesn't really mask what's going to happen, what's happening in the underlying economy. So I think, would I be buying U.S. dollars now? Probably cautiously, just because, for example, dollar yen 112.50 is held very well. But I think there's still a lot of uncertainty. We're still watching China. But it's more once the dust settles, though, I think we could see a much stronger dollar rally. Right now, there's a lot of choppy price action based upon those policy headlines.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.